Hey, are you considering setting up an e-commerce store? Or maybe you already have one and are looking to take it to the next level. Well, if that's the case, then there's something you should definitely consider. E-commerce accounting. My name is Natalie. At SaasAnt, we are experts in e-commerce accounting and can help you navigate the complexities of managing your finances. We understand that staying on top of cash flow and taxes can be overwhelming. With years of experience working with businesses across different industries, we offer tailored advice and guidance that will maximize profits while minimizing stress. Let us show you how e-commerce accounting can make running your business easier. E-commerce accounting is the process of tracking and managing your finances related to running a successful online business. E-commerce accounting is essential for any aspiring online entrepreneurs looking to make sure their finances are managed in the most efficient and accurate way. It's not enough to just have an online store. You need to know how to track purchases, manage taxes, and process payments. When it comes to e-commerce accounting, there are a few key components to consider, and they're not all as boring as you might think. Here's an overview of what goes into e-commerce accounting. Purchase order. A purchase order is a document that the buyer uses to tell the seller what they want. It tells them what items to buy, how many, and how much it will cost. It also says when it needs to be delivered. Sales order. When you buy something, the seller makes a document called a sales order. It tells you what was bought, how much it costs, and when you need to pay for it. Cost of goods sold. Cost of goods sold is the money it takes to make or get the things you sell. For businesses that do online sales, cost of goods sold includes things like raw materials, people's wages, and other expenses related to making the items. Accounts payable and accounts receivable. Accounts payable and accounts receivable are two types of money that a business handles. Accounts payable is the money a business owes to people or companies. Accounts receivable is the money that people or companies owe to the business. E-commerce sales tax. Businesses that sell online must follow rules for sales tax. Sales tax rates change if the business sells in different states. Business owners must know the latest laws and stay up to date on changes. To manage e-commerce sales tax, keep records of taxes due in each state and track all sales. E-commerce companies use accounting methods to keep track of money. They might need the cash basis method or the accrual accounting method. It depends on how big and complicated their business is. Cash basis accounting is a way to keep track of money. When you get money, you write it down. When you pay out money, you write that down too. Small businesses use this because it is simple and easy to understand. With cash basis accounting, there are no accounts receivable or accounts payable, just the cash that comes in and the cash that goes out. Accrual accounting is more complicated than cash basis accounting. With accrual accounting, when something happens, called a transaction, you record it right away, even if you do not get money or pay money yet. Revenue is recorded when it's earned and expenses are recorded when they happen. This method pays attention to what people owe you, which is accounts receivable, and what you owe people, which is accounts payable. Here are some steps to follow when doing e-commerce accounting. Step 1. Choose the best accounting software. Step 2. Track sales and expenses. Step 3. Monitor inventory. Step 4. Reconcile bank accounts. Step 5. Generate financial statements. Let's go through them one by one. To do your e-commerce accounting right, you need the right software. It helps you track, look at, and manage your money. Here are a few things to consider. Set a budget for how much you want to spend. Research and find software that has good reviews from other online business owners. Make sure it is easy to use. Take advantage of free trials or demos offered by accounting software providers to test the software and ensure it meets your business needs. Here are few features you should look in an accounting software for e-commerce sellers. Data security. Look for software that uses the latest encryption technology and has additional security features such as two-factor authentication. Inventory management. This will allow you to keep track of product stock levels, sales trends, warehouse locations, and more. Tax compliance. Ensure your e-commerce accounting software meets applicable tax regulations and offers any necessary tax forms or documents. Sales reporting and analysis. Your software should provide reports on sales trends, customer demographics, profits and losses, and more. And finally, integrations. Ensure the software integrates with other tools you use for your online store, such as e-commerce platforms, payment processors, and shipping solutions. QuickBooks is a very popular accounting software for e-commerce businesses. Here are some reasons why QuickBooks is an excellent choice for e-commerce businesses. QuickBooks can easily integrate with popular e-commerce platforms such as Shopify, WooCommerce, and Amazon. QuickBooks automates your financial management processes, saving you time and reducing errors. QuickBooks allows you to manage your inventory efficiently, tracking your stock levels and reorder points. QuickBooks makes it easy to track your expenses and deductions, ensuring you claim all eligible tax deductions. QuickBooks has robust security features, including bank-grade encryption and multi-factor authentication, to ensure the security of your financial data. Let's say you run an online business selling some widgets. You use Shopify as your business platform and QuickBooks for your accounting. Here's how you would track your sales and expenses in QuickBooks. Number 1. You connect your Shopify account to QuickBooks, which automatically imports your sales data into QuickBooks. Number 2. Then categorize your expenses in QuickBooks, such as $20 for shipping costs, $30 for website hosting fees, and $50 for advertising expenses. Number 3. You create an expense transaction in QuickBooks on a specific date. Number 4. You reconcile your QuickBooks accounts with your bank and credit card statements to ensure everything matches up correctly. Monitor inventory. Here is a practical example of how to monitor inventory for an online business. 1. Set up an inventory tracking system. Choose a software or tool to track your inventory levels, such as QuickBooks. You can also use an e-commerce platform that has built-in inventory management features, such as Shopify. 2. Record incoming inventory. When you receive new inventory, record it in your inventory tracking system. Include information such as the SKU, quantity, and cost. 3. Update inventory levels. When you fulfill an order, subtract the sold quantity from your inventory levels. This will help you keep track of how much inventory you have on hand. 4. Set up reorder points. Determine the minimum quantity of inventory you need to have on hand to fulfill orders. This is known as your reorder point. When your inventory levels reach this point, it's time to reorder more inventory. 5. Conduct regular audits. Conduct regular audits of your inventory levels to ensure that your inventory tracking system is accurate. This can help you identify any discrepancies and prevent inventory shrinkage. For example, let's say you sell t-shirts in your e-commerce store. You have 100 t-shirts in stock and sell 10 t-shirts per day on average. Based on this demand, you determine that you need to reorder more t-shirts when you have 30 t-shirts left in stock. You receive a new shipment of 50 t-shirts and update your inventory tracking system accordingly. As you fulfill orders, you update your inventory levels and keep an eye on your reorder point to ensure that you don't run out of stock. When you reconcile a bank account, you are checking that the numbers in your bookkeeping system match the numbers on your bank statement. Here is what you should do. 1. Gather bank statements. Obtain the bank statement for the period you want to reconcile. 2. Compare transactions. Compare the transactions recorded in your e-commerce system with those on your bank account statement. 3. Identify discrepancies. If there are differences between two records, look into why. Reasons could be that one record says something happened earlier than the other, the bank charged a fee, or someone made a mistake when entering the information. 4. Adjust records. Make any necessary adjustments to the e-commerce system to ensure that it accurately reflects the bank statement. This may include adding missing transactions or correcting errors in recorded transactions. 5. Reconcile balances. Once all discrepancies have been resolved, reconcile the balances of the e-commerce system and the business bank account statement. The ending balances should match. 6. Document and report. Document the reconciliation process and the adjustments made, and report the findings to relevant stakeholders. 7. Repeat regularly. Reconciling your bank account should be done regularly, such as monthly or quarterly, to ensure that your records are up to date and accurate. Once e-commerce businesses have reconciled their bank accounts, it's time to generate key financial statements. Financial statements provide business owners with important insights into their performance, enabling them to make informed decisions about their e-commerce operations. The most common types of financial statements used by e-commerce companies include income statement, balance sheet, and cash flow statement. QuickBooks offers integrations with the leading e-commerce platforms like BigCommerce, Magento, and SaasAnt PayTraQer to help you streamline your business's accounting processes. With these integrations, all of your financial data is automatically synced into QuickBooks, including orders, payments, refunds, taxes, and more. Not only does this save you time, but it can also reduce errors and help make sure that your financial records are up to date. Additionally, all of the data is securely stored in QuickBooks Cloud database so that you have access to it anytime, anywhere. So if you are looking for a way to simplify and automate your accounting processes, then QuickBooks e-commerce accounting integrations are a great option. With these integrations, you can quickly and easily get accurate and up-to-date financial data in one secure place. If you are interested to learn more about e-commerce accounting, then we got you covered. I will leave the link in the description below. Happy accounting!